can get into that in the Q&A. Despite these economic challenges, however, the increasingly draconian repression of dissent and the extensive internal party purges that Xi Jinping has carried out means that most of the signs that we've seen suggest a continual tight rein by Xi Jinping within the Chinese Communist Party. There's some slight changes very, very recently with him sort of seemingly backing down on at least a little bit on the issue of Hong Kong. But by and large, all the signs still suggest that he's pretty strictly in control. Okay, so in terms of continual intervention in the economy, there are no signs that the Chinese government is withdrawing from the economy. If anything, they're intensifying their intervention in the economy. The three major channels that I've seen is through bankruptcy, through overseas investment, and through lending, domestic lending. Bankruptcies, a lot of Chinese firms are in trouble, as I indicated before, but the Chinese government basically are telling banks to keep lending to them so that they don't go bankrupt. A lot of Chinese households and companies would like to invest overseas, but the Chinese government has ordered many of these companies to liquidate their assets and bring the money back to China because the foreign exchange reserve have been drained in recent years. Banks in China would like to lend more money to the real estate sector, but the Chinese government has forbade them from doing that, and instead are channeling lending to industrial policies. So industrial policies looms very large still. Finally, I think China has weaponized its currency, as we have seen. The renminbi has weakened past 7 to $1 in recent weeks. Overall, in the past couple of months, the renminbi has weakened by 4% vis-a-vis the dollar, which is one of the largest moves that we've seen in recent years. But this actually, not only is it a problem for China, of course, China, the problem there is that investors in China may lose confidence in the renminbi and move money out of China drastically, which will wipe out its foreign exchange reserve. But this is potentially a problem for the United States because US banks, US financial institutions have exposures to China to the tune of hundreds of billions of dollars, directly and indirectly. Banks in the United States have lent close to $100 billion to Chinese institutions. Institutions in the US have bought, I don't know the exact number, but I would guess, $50 to $100 billion in debt issued by Chinese corporations. And if the currency were to devalue very drastically, then the stature of a lot of these loans become unclear. Chinese companies whose cash flows are denominated in renminbi, some of them may be forced into defaulting on their obligations. So I think a thorough edit of the direct and indirect exposures of major US institutions to the renminbi, I think would be a very timely thing, just to make sure that if the renminbi were to crash suddenly, that major US institutions would not get into trouble. Finally, to combat Chinese industrial policies and technology theft, the US will need to increase multilateral efforts to increase transparency on China's financial subsidies to the technology sector. As I indicated previously, is still very substantial. Here, perhaps the IMF can help. And then finally, it should coordinate with close allies to police technology acquisitions by authoritarian countries and to set best practices for internet and cyber security with our allies. Thank you very much, and I welcome any questions.
Mr. Polk.
Thank you very much to the Commission for having me. I'm going to talk mostly about short-term economic growth, the Chinese policy response, and what it tells us about what they're thinking in terms of the relationship with the U.S. I have a little bit of a different perspective from Victor, so I think it'll be good for us to see different sides of this. China's economy is currently growing at the slowest pace since 1990 and has been decelerating rapidly since mid-2018. Given the growing tensions in the bilateral relationship between the United States and China, it is highly important for U.S. policymakers to understand the sources of China's current economic weakness, the policy response that Chinese officials have laid out to address these challenges, and the likely impact on China's stance in trade negotiations with the United States, as well as the country's broader policy towards the U.S. China's current economic slump is overwhelmingly, indeed almost entirely, due to domestic economic challenges and policy choices. While trade tensions over the past year have had a significant effect on financial markets, individual companies, and specific geographies, in aggregate, the direct effect on the Chinese economy has been minimal. However, the negative effects of trade tensions are likely to grow over time, especially given the latest broadening of tariffs that took place on September 1st. The most important factors driving China's current cyclical slowdown are policy choices that Chinese leaders made in early 2017. In April of that year, financial regulators introduced a policy program to slow the growth of credit, seeking to contain the overly fast accumulation of debt that the country had seen from 2010 to 2016, and to de-risk the financial system, which had experienced significant bouts of volatility in 2013 and 2015. In addition, at the same time that central officials were seeking to de-risk the banking system, they also sought to harden budget constraints for local governments. Specifically, regulators increased scrutiny over local government financing vehicles, which have been conduits for off-balance sheet spending in recent years. Officials also gave cadres lifetime responsibility for the debt profile of the jurisdictions that they oversee. The combination of significant financial tightening and regulatory tightening over local government spending are the two key drivers behind China's current growth challenges. Notably, both of these drivers were intentional, domestic policy-induced measures. And even more notably, Chinese policymakers have largely kept these policies in place despite the toll on economic growth and the additional economic uncertainty that has arisen from trade tensions with the U.S. While there was a significant element of intentionality behind the policy mix that led to China's current slowdown, policymakers have been caught off guard by three unforeseen developments. First, the intensity with which the financial de-risking campaign and associated economic slowdown have disproportionately affected China's private sector. Secondly, the speed and intensity with which the global narrative has turned against China, both on political and economic fronts. And thirdly, the longevity and intensity of U.S.-China trade tensions. Each of these factors has worked to unnerve Chinese policymakers and has largely defined China's evolving policy stance since growth began slowing in mid-2016. However, despite the fact that the prevailing media narrative around China has focused mostly on U.S.-China tensions, financial de-risking and the broader global shift against China have arguably been more critical in shaping China's policy actions. So far, the U.S. tariffs appear to have had little direct macroeconomic impact on the pace of growth for Chinese economy, especially in comparison to the domestic slowdown in infrastructure investment and tightening of financial conditions. In fact, for most of 2018, given the tiered nature of tariff imposition by the United States, Chinese exports saw strong growth as U.S. importers sought to front-run each new round of impending tariffs. In 2019, that dynamic has largely gone into reverse, and the value of exports to the United States has fallen, taking about 2 percentage points off of overall Chinese export growth. However, that slowdown has been almost entirely offset in local currency terms thanks to the weakening exchange rate. That is not to say that the tariffs have had no impact whatsoever. Rather, the immediate impact has been primarily psychological, working to undermine private sector sentiment in China at a time when it was already ailing. Those effects on sentiment are likely to increase over time. Importantly, despite the slowing economy and uncertainty from U.S.-China trade tensions, Chinese officials are taking a largely unproven approach to economic policy support. During previous bouts of growth deceleration, authorities have responded by quickly ramping up monetary and credit growth to boost investment, primarily in infrastructure and real estate. In 2019, however, authorities have taken a different tack. They have focused economic support measures on attempts to improve the overall business environment and to incentivize banks to prioritize lending to small private sector businesses. Finally, they have boosted efforts to obtain inbound capital flows via market opening in some key areas. Chinese authorities increasingly see foreign capital inflows, both through FDI and portfolio investment, as key to improving the domestic market. And that reality, combined with the increased pressure from the U.S. and other foreign governments, is underpinning a pragmatic market opening streak. This pragmatism of Chinese policymakers is often overlooked due to the broadly increased tensions between the U.S. and China. However, it is important that U.S. policymakers understand that China is increasingly looking to widen market access for foreign companies, both thanks to this increased pressure from the U.S. and other governments, as well as China's own domestic needs. In my view, the fact that Chinese policymakers are understanding this current, unproven policy approach, focused on improving the business environment and opening wider to foreign investment, as opposed to the crude stimulus efforts of the past, underscores Chinese policymakers' confidence in their ability to shepherd the economy through this downturn. Chinese officials' confidence in their economic management ability may well be misplaced. However, the fact that this confidence exists should indicate to U.S. policymakers that China's economic growth is not presently a point of leverage for pushing Chinese officials to acquiesce to U.S. demands in trade negotiations. The domestic focus among Chinese policymakers underscores that directly influencing CCP behavior and policy decisions toward the economy or otherwise via U.S. policy actions is highly difficult. In my view, the most reliable way to adjust to China's economic rise will therefore be to invest in American competitiveness. This means prioritizing investment in the American education system, especially in science and technology. While such investment should always be a priority in my view, making these investments now is even more critical than the past because of the heavy emphasis that China is placing on improving its own education system, especially in the sciences. Thank you.
Thank you, Mr. Polk. Dr. Economy.
Thank you very much, Vice Chair Cleveland, Commissioner Fiedler, and members of the Commission. I appreciate the opportunity to speak before you this morning on this really important issue of how the trade war is affecting China. In the time allotted to me, I'd like to focus on three or four trends that I see emerging. But let me preface my remarks by putting forth one caveat, which I think speaks to the point that Mr. Polk just made, which is it's difficult to disaggregate the effects of the trade war, right, trade frictions, from what's taking place domestically in what was already a slowing Chinese economy. So in my remarks, please understand that what I'm talking about is an added layer of pressure that I believe comes from the trade war, not necessarily the direct impacts of the trade war on the Chinese economy. So first, I think as in the United States, the trade war has contributed to volatility in the stock market, greater uncertainty, and declining levels of consumer confidence. I think this is manifested in a number of ways. All provinces except Xinjiang and Jiangxi have lowered their growth targets this year. There is slowing growth or even absolute decline in household consumption in areas like appliances, electronics, and autos. And there's been a very sharp contraction in venture capital deals, both in terms of the scale, the value, and the number. For example, there was a decline of 75% in the value of deals from the second quarter of 2018 to the second quarter of 2019, a decline of 62% in value from the third quarter of 2018 to 2019. Second, the trade war, I think, has forced Chinese policymakers to focus more on putting out fires as opposed to what they really wanted to work on, which was structural economic reform. If you look at the Rhodium Group's most recent report, it finds that there's only been progress in 2 out of 10 areas of economic reform. Trade, which, as Mr. Polk mentioned, the Chinese have lowered tariffs in a number of areas, and in the financial sector. Overall, however, I think the Chinese have, in fact, to some extent reverted to traditional mechanisms, like encouraging local governments, again, to borrow and to develop infrastructure through issuance of special bonds, providing subsidies for consumer goods, cutting the sales tax, for example, for rural residents in half. They have resisted. They were going to eliminate the subsidy that they were providing for purchases of new energy vehicles. They've not done that. So I think they're looking for many different ways to try to ensure that Chinese economic growth continues. And many of these, again, are those short-term measures that they have traditionally relied upon. Third, I think the trade war undermines the ability of the Chinese leadership to tackle other socioeconomic priorities. For example, in the environment, the Minister of Ecology and Environment in late 2018 explicitly stated that the trade war was going to force the Chinese government to take a step back from their most ambitious targets for reducing pollution. And indeed, we saw pollution soar between sort of December through March of this year, as they allowed heavy industry to go and took a step back from enforcement and from more ambitious targets. We've also seen CO2 emissions increase each of the past 2 years in China, and they're undergoing a very significant debate once again about climate change and how committed the Chinese leadership needs to be in the face of this slowing economy. Demographics, economic optimism correlates very directly with birth rate. And we've seen just from 2017 to 2018, despite the fact that the Chinese have now a two-child policy, a decline in births of 2 million, at the lowest rate since 1961. Marriage rate is the lowest it's been in 11 years. Labor issues. So I think the reorientation of the supply chain is having some impact. Estimated somewhere, the numbers that I've seen are between 1.2 and 2 million jobs have been lost as a direct effect of the trade war. Li Keqiang, the premier, has talked about employment as his #1 concern, and they are now establishing a new central leading group on employment. So even if we're not sure of the exact impact, we do know that the concerns are significant, right? We can look behind the scenes to try to see what they're doing politically to address these problems, even if we don't know whether the unemployment rate is really 4%, as they say, or 20%, as you can find some Chinese scholars asserting. And then last, I think the trade war at this point in time is now strengthening the hand of the hardliners. I think if you look back 9 months to a year, you would find a period of time when Chinese economic reformers, I think certainly privately, but also to some extent publicly, would talk about President Trump and the trade war as an opportunity. Right, an opportunity to push forward on structural economic reform, much in the same way that Zhu Rongji used the pressure from accession to the WTO to work on state-owned enterprise reform back in the late 1990s. Now, however, that type of talk is not, at least I don't hear it anymore. Instead, what you hear is that the United States is trying to contain China. Our own narrative has moved from one of holding China accountable, right, to a rules-based order, to talking about China as an existential threat. And I think that shift in narrative has allowed the hardliners to come up with their own narrative that basically says the United States is trying to contain China. This isn't simply about intellectual property theft or what we're doing wrong on the lack of market access, right? This is about the fact that we are now, when I was in Beijing in July, somebody said, we are now technologically superior to the United States, and the United States doesn't know what to do. So this is their response. So I think this is emboldening hardliners and giving them a sort of greater strength and weakening the hand of economic reformers. I think the fact that we don't distinguish now between national security and economic security is also problematic, right? Are we talking about 5G? Are we talking about subway cars? I think is an issue that we have to address. And I think it also very clearly enhances Xi Jinping's efforts to decouple the two economies and push forward more aggressively on Made in China 2025. What should we do? I think first we have to change our narrative back to one that talks about China's adherence to the rules of the game. And that is a good way to bring in our allies because they all do support what we're trying to do with China on the trade front and allows us to bring more pressure to bear on them. I think second, we do have to distinguish between economic and national security more clearly. And then third, I think, as Mr. Polk mentioned, it is about U.S. resilience. It's about investment, immigration, and education. I'll stop there.
Thank you. Commissioner Fiedler?
I want to delve into a little of the behind-the-scenes sort of politics and the impact of what I characterized earlier as unpredictability in the relationship and what that has meant in normal diplomatic relations going on. The trade war has captured most of the public attention, but there are lots of other things that have to be going on behind the scenes. In other words, do we have as much access to people in positions, whether in the private sector or the government sector, as we had before? How are the Chinese viewing the unpredictability of the relationship now? Liz, if you would start.
I think in the beginning, the Chinese felt as though they had President Trump pretty much figured out. They believed that by buying more goods, they would address what was his primary concern, and that the whole thing would go away. I think over time, they have become less certain of their ability to understand the direction in which the administration is moving. And I think at this point in time, there's also a certain amount of exhaustion. So I think if you look at the sort of the various stages of Chinese statements, I think they begin with, there was some laughter and some jocularity. I can tell you in the expert community around President Trump initially, I think that moved to some greater concern. And again, a desire to strike a deal and to move forward, to have a good relationship with China. Victor, I think, sort of began to talk a little bit about some challenges that President Xi might have faced. This would be last summer, where it looked as though the fact that he couldn't make the U.S.-China relationship work was bringing some pressure to bear on him within the top echelon, as well as pushback on the Belt and Road Initiative. I think that has now ended. Because the more unpredictable the United States is, the more that they can't understand what it is we're really after, what is a good deal. I think the less patience they have, and the more they just believe that Xi Jinping is the right person to stand up and lead China forward. So I think, sort of going back to what I was suggesting earlier, I think there was a moment in time when economic reformers were empowered. There was a sweet spot, and I think we've moved past that sweet spot at this point in time.
Thank you. Either of you want to comment?
Yeah, I mean, I would agree that the change in perspective in Beijing has been quite swift. Just a year ago, June 2018, before the first 301 tariffs came to effect, there was still a feeling we can figure out the U.S. president, and the Chinese were just absolutely stunned by how quickly the narrative, the sentiment in Washington, D.C. on both sides of the aisle shifted against them. And now they very much view the relationship as one of containment. And in terms of the volatility, I think they're steeling themselves essentially for short-term volatility and long-term competition. Just yesterday, Xi Jinping gave a speech to the Central Party School talking about how we have to get ready for struggle on economic fronts, on societal fronts, on political fronts. And the political narrative in China internally is very dire right now, and sort of talks about the long march and self-sufficiency and all these things. And so I think they view the world as having fundamentally changed in this past year in terms of the relationship with the U.S.
Victor?
Very quickly, I think just echo a couple of points that have been raised already. So I agree completely that the fact that One Belt, One Road has turned into this big waste of money, the fact that China does not seem to be managing its certainly economic relationship with the United States very well, and then of course what's happening in Hong Kong really is diminishing Xi Jinping's reputation. Because I think when he first took power, at least he saw himself, and therefore, of course, the rest of the party also had to agree with the perspective that he would be the savior of the Chinese Communist Party. And now we've seen not sort of disastrous blunders yet, but kind of, fairly costly blunders, and him having to sort of change course. So I think going forward, this is going to be interesting. It perhaps will change the way in which he makes decisions to make it a bit more democratic instead of just him making all the decisions. So we don't know. I think that's an open question. There are some signs to suggest that maybe this is the case. In terms of the reform, I think a lot of it is as the blunders accumulates, the party increasingly shifts from wanting to sort of try new things to speed up growth or to make the market more market-oriented to just risk management. This is something that Andrew pointed out already. And again, I was also struck by this speech in the Central Party School where, was this the Pudong Cadre School or I don't know what? one of the party schools in an event where it seems like he's preparing a senior level cadre. So these are the audience is pretty senior level cadres for disasters to come, and basically telling them that even if really hard times were to come, you should remain loyal to the Chinese Communist Party. That's very dire language, at a time when we're not even, and I agree with Andrew that even though, trade itself has had some impact, but, the Chinese economy is a massive economy. The trade war certainly has not, crashed the economy by any stretch of the imagination. It has just hit sectors that have been main beneficiaries of China's previous industrial policies.
Thank you. Commissioner Wessel?
Thank you all for being here, for the time you've put into your testimony, both written and oral, so thank you. I have to say I'm sort of confused and stymied by all of this because, we're still having discussions about engagement and theoretical rebalancing, et cetera. And we're in the middle of a real challenge period about how do we address what has been taking place in China. Dr. Economy, you talked about the issue of compliance with the rules, et cetera. I think after 18 years in, we should agree that China has not complied with many of the rules. And certainly with the vision that the Western nations had when China joined. So we're at a point, in my opinion, where it was time to confront China on its policies. We saw little engagement by our multilateral partners. Some of that was our own fault by not engaging them, and still is. But the multilateral system doesn't seem to be willing to or capable of addressing the China challenge. And we're also at a point where we are looking at different metrics about what success is. And we've talked a bit about investment this morning. To me, opening China up for more U.S. investment will probably only continue our current path, as 60% of China's exports emanate from foreign invested enterprises. We're not reaching the Chinese market or its consumers like we'd like. It's still being used as an export platform. More investment will probably lead to more technology sharing, et cetera. So whether you believe the problems in China have been brought about, were of their own making, and the trade policies are a big or just a small contributing factor, what do we do now? Do you believe multilateral partners are really going to engage? Do you believe that the WTO is capable of, with its rules and with its decision-making process, of addressing the China challenge? And I believe it was LBJ many years ago, said when you have somebody by the ear, don't let go to try and get a better grip. I'm paraphrasing.
I was going to say, I don't think those are the exact words that President Johnson used.
We're on C-SPAN, so those are the ones I'll stick with. Whether you like the policy the president has engaged in or not, isn't it time that we confronted China? And what would you do differently now to try and make sure that we actually get to a better, let us say, Western concept of adherence to the rules? And I'll go down each of the panelists. Dr. Economy, since I used your name first, why don't you start?
Okay, thank you. So I don't disagree that it was time for a reassessment of the U.S. approach to China. And I think actually the Trump administration has done a good job of understanding China under Xi Jinping and coming to the conclusion that China is not moving in the direction that we had hoped for across the full range of issues, in the economy, the political, domestic, and in terms of its foreign policy. So I think that has happened, and that was important. At this point, however, I think it would be useful to draw back in our allies because, in fact, they do agree with us, across the board, right? Whether it's on Huawei, we have support from a number of countries, whether it's on sort of the Belt and Road Initiative and concerns, the EU has stood up on that, whether it's human rights, we find partners in the United Nations, they're out there, but we are not, in fact, engaging with them. And the advantage of bringing in the allies, I think, is twofold. First, it reduces that sense of the United States simply trying to contain China and that we're afraid of China, right? I do think it's important that we shift the narrative because the truth is we look weak when we're in China now. We look as though we are operating from a defensive position as opposed to a position of strength. So bringing in our allies diffuses that sense that this is all just about the United States and China. I think it also helps us to bring pressure to bear, right? The European China Chamber of Commerce and the American China Chamber of Commerce say the exact same thing. I think that's important. We can still use reciprocity, but I think asserting a more positive vision of U.S. economic leadership globally is equally important. Free and open Indo-Pacific, right? And filling that in, as I think a number of our agencies have been doing, I think is absolutely essential. So from my perspective, the best defense is a good offense. And I don't think at this point that is what we are undertaking.
Mr. Polk?
I'd echo a lot of what Dr. Economy said. I think the relationship has to change, and everyone is trying to figure out what a sustainable equilibrium looks like. We're in an unsustainable equilibrium with China right now, and the relationship needs to undergo change. I don't have the answer for you today on what a stable equilibrium looks like, but I do think there are a few things bringing along friends and allies. Absolutely, I interact with, embassies in Beijing every single day, and every European country, New Zealand, Australia, Japan, Korea, they all agree with the idea that China needs to play by the rules, and things need to change. So engaging those allies and bringing them along is hugely important. Secondly, Dr. Economy talked about the national security issue. On both sides of the Pacific, the idea of national security is getting bigger and bigger and bigger in terms of economic national security. So finding some limits of that we can live with, I think, is hugely important. Otherwise, if everything in both economies is national security, there's not even a starting point for discussions. And then I think also understanding the nuance of China, the tougher stance from the U.S. and others, I think, has produced change in China both positively and negatively. I actually see more opening than I think a lot of other people do, specifically in the financial sector. I also see marketization in areas of the economy. Yes, the state is growing, but also there is more room for markets. And in the Chinese leader's mind, that's not a total paradox. Those both things are both happening at the same time. So in a sense, recognizing when China is moving in the direction we want. There's multiple things happening at the same time. So recognizing that, I think, also gives a basis for discussion. But I would say those three issues are top of mind, bringing along our allies, defining national security, especially what's not national security, and then recognizing actually where there's some progress. But absolutely, the pressure needs to continue because, in my view, it's produced some good results. And if we can continue that pressure with a positive vision of what the outcome might look like, then we're moving in the right direction.
Hi. So I also agree that things have to change. The trading relationship has to change between the U.S. and China. But I think it's helpful here to segment between non-strategic sectors and strategic sectors. So there are a lot of non-strategic things like farm goods, energy. You could say, well, strategic or not, and textiles and furnitures and stuff like that, where American consumers have benefited enormously by buying these things at a relatively low cost from China, from the rest of Asia. And also, American businesses have benefited enormously by selling a lot of farm goods, soybeans, etc., to China. Now, of course, there are strategic sectors like IT equipments, it's one of the prime examples where China's stated objective has always been, since 15 years ago, to relocate the entire global supply chain from other countries to China. They have largely succeeded in this quest, with the exception of several very high-end components like chips, et cetera, et cetera. There, of course, that needs to be restructured. But the way that we're doing right now, what we're doing now, is to force some of our allies to move their production out of China. I don't think that's especially helpful, because that's basically like a club where the only benefits that you get is bad things, right? So it's a club for bad things. Instead, I think the U.S. should try, and its allies should try to think of a way to form a club where there are positive incentives, right? So what's in it for them if they are willing to relocate some of the supply chains out of China to other countries? There has to be some kind of benefits, whether it is, if they meet certain standards, then they're qualified to get certain kinds of contracts for critical infrastructure or security-related contracts. So I think I would urge policymakers to really think about ways to create positive incentives.
Thank you.
Chairman Bartholomew.
Thank you. Interesting testimony from all of you. Thank you. Thank you for the continuing work, analytical work that you do. I really want to associate myself with a comment about the importance of working with our allies. I think that it's a China issue. It's a global issue for us, and I think we need to rebuild those relationships and do what we need to maintain them. I would say, though, that certainly the problems in the relationship, I mean, I've been doing this for 30 years now. I think some of you are probably doing it just about as long. These are not new, and people seem to forget that we have been struggling with some of these issues, which were exacerbated by the World Trade Organization accession, right? It was supposed to solve the problems, and it hasn't. Dr. Scher, I'm going to be like Wessel and end up talking instead of asking questions, and I have questions, but... But I do want to say that the consequences of losing textiles and shoes and furniture for American workers and American communities has been quite significant. It has not been cost-free, right? It has not been cost-free to regions of this country. It has not been cost-free to the tax base in communities, to their ability to educate their children and provide health care and all of these things. So it's to me, it's not quite as simple. Another question or issue I have is, wasn't some of this moving of production out of China happening already because of increased labor costs? So it's a continuation of a trend. It might be speeding up. Okay, that said, what evidence, again, for 30 years we've been hearing about economic reformers inside of China and how important it is to support them, and I would argue that the MFN debate that we had back in the 1990s, some of what we were trying to do was to support the economic reformers. But what evidence exists that Xi Jinping himself actually is an economic reformer or wanted economic reform? Is there any? No. It's an easy question to answer. I can move on to another one.
I would just quickly say, I don't think Xi Jinping cares all that much about the economy. I think he cares about politics, and his project is to rejuvenate the Communist Party of China. And he has largely delegated the economic decision-making now to Vice Premier Liu He, and even it seems Li Keqiang is still in the mix a bit. So I think the de-risking campaign I talked about was all about Liu He grabbing Xi Jinping's ear and say, listen, if the economy blows up while on your watch, it doesn't matter if you rejuvenate the party. And so I think that's the last thing on his mind. He cares about politics, military, society, Chinese culture, and the economy is just a tool to get those things done.
Dr. Economy or Dr. Scher?
So I would say maybe not that he doesn't care about the economy, because he does have, built into his great rejuvenation of the Chinese nation, having China be a modern, innovative economy on par with the United States and Japan and Germany, and doubling, Chinese incomes by 2020. So he definitely has economic objectives. But you asked about Xi Jinping as an economic reformer. And I think if we take reform to mean opening up, right, reform and opening up, not just reform as change, he clearly is not an economic reformer. Everything about Xi Jinping from day one has been about reasserting the role of the party and the state into the Chinese economy and into Chinese society, right? So whether you're talking about enhancing the role of party committees, whether in Chinese enterprises or in joint ventures, right, or even ensuring that, multinationals have party committees, or you're, talking about continuing to strengthen the role of state-owned enterprises, or applying the social credit system, right, to companies, including to multinationals. All of that is about enhancing the role of the ability of Xi Jinping and the Chinese party to use companies as tools of the state. So economic actors as political actors.
Thanks. Dr. Scher, anything?
I think that one of the key points that people should realize is that Xi Jinping, I think despite the fact that people say, oh, he was a governor of Fujian province, which is in the coast, I think his understanding of how the market economy actually operates is very superficial and minimal, because he's lived his entire life under a planned economy. Even after the reform, he was already a senior government official where all of his food, his housing, everything is arranged by the Chinese government. So I don't think he actually knows how the real market operates, and especially not the financial market, which is another level of difficulty. So I think a lot of high-level policymakers in China struggle with this limitation.
Thank you. Dr. Economy, what you said, the phrase of using companies as tools of the state, is a very important thing, and if I have a second round opportunity, I want to delve into that. Thanks.
Admiral McDevitt.
Thank you. As always, when we're talking about the economy, I spend a lot of time learning as opposed to questioning, but I do have a couple of things that came to mind listening to your excellent testimonies. Dr. Economy, you dwelt on the issue of hardliners. I guess I've been, in fact, I'm quite certain, I've been dealing with Chinese hardliners for the last decade that I can think of, if I'm talking to Chinese, either PLA or security people, and they've been talking about the U.S. trying to contain China since the pivot was announced, and that's 2010. So there isn't anything new, I would suggest, that there's a lot of people in China talking about the U.S. trying to contain them. What I'm interested in is today's hardliners versus the ones that 10 years ago were fulminating. Has the hardliner view expanded? Are there more people who would sign up to being hardliners in China because of the trade wars and what have you? The other question I have, and I'd like any or all of you to chime in on this, is the connection between the downturn, the slowing of the Chinese economy, and the willingness of Xi and whoever else advises him on Belt and Road to, as we heard in this past summer's global BRI conference, the new approach, high quality projects, we're going to get a handle on corruption, et cetera, et cetera. Is this all related to the downturn in the economy, or is it related to the narrative that I think Washington started by calling the BRI a debt trap, et cetera, and raising all of the inhibition or all of the potential problems associated to BRI?
Okay, so let me say one word on the Belt and Road question and then go to your first question. I think absolutely the Trump administration, Secretary Tillerson in particular, was out there very early on calling the Belt and Road debt trap diplomacy. At the time, it looked like sour grapes because we didn't have an alternative. Now we kind of do, plus the Japanese are out there with a lot of higher quality offerings than the Chinese. In terms of whether, so I do think that that played a lot, had a lot of impact in terms of focusing the attention of many countries, right, on what was going on, and then they're realizing that some of what they were doing with China in the Belt and Road was not necessarily in terms of serving their long-term interest, right? So I do think, and there was a lot of pushback, and that certainly contributed to the April forum and the sort of quieter tone. Do I think that China is going to make a significant turnaround in terms of actually addressing the corruption, improving transparency, higher quality, et cetera? I think probably not. This is not, the Belt and Road is just built upon, more than 2 decades since the going out strategy of the late 1990s, which was China going out for natural resource quest. They already have in place many rules and regulations within China Exim Bank, China Development Bank, within the Shanghai Stock Exchange, et cetera, that are all devoted to trying to ensure transparency, rule of law, and accountability in their overseas strategy, and has yet to come to fruition. So I'll see it, when I see it, I'll believe it. In terms of whether or not there have always been hardliners and what's different now, I think what I'm really talking about is that we're closing down the space for the reformers and the economic reformers. It wasn't even just the economic reformers who were quite vocal last October, et cetera, about trying to push ahead with structural economic reform. But you could talk to many people in the political sphere and also entrepreneurs who would say, what Donald Trump is doing right now with this trade war is great because it's the last bulwark against Xi Jinping's sort of overreach and his great ambitions, right? And the fact that he's clamping down politically. So they were encouraged by what the United States was doing. But I think at this point we've pushed too far. And so when I'm talking about emboldening hardliners, I'm saying that we've crowded out a lot of the space for those reformers. And we've given, with our narrative and somewhat of our craziness, we've given Xi Jinping a scapegoat for what's going on, for the challenges that he's faced, and the ability to stir up nationalism.
Yeah, just quickly on the hardliners issue, I would just encourage you to think, yes, there have always been hardliners in China, but I don't conceptualize it as hardliners dragging Xi to a more conservative position or a more ideological position. I don't think he is outflanked by anyone. Maybe there are more reformist voices that are cowed because of current dynamics, but so just Xi is a hardliner is what I'm trying to say. So there's no one outflanking him there, no one trying to pull him in any direction on that side. On the BRI stuff, I would just say also, Xi Jinping has characterized the BRI as a 100-year project. So, we see these news stories on a day-to-day basis. The BRI has failed. Well, we won't know for 100 years. So we don't know if it's failing or being successful. So I think that is one of the, I think it's a misconception that China's policymakers always take this long-term view or whatever. But on that front, I think they are. And I would also just say, they learn. As I said, they are pragmatists. And I think, frankly, they got sick of throwing good money after bad. They've got burned. They so have decided to recalibrate for the time being. They also had a capital outflow issue, which was fundamentally important for them reining in that spending. Dr. Kami's been doing this longer than I have, so maybe, I agree with her that I'll believe it when I see it in terms of really trying to root out corruption, but at least they seem to be wanting to do these projects on a more straightforward, not a fully transparent basis, but maybe a more transparent basis. Because there's an understanding, in my view, that corruption is, one of the key issues that is an existential issue to the party domestically, and that if they start to export that, it may become an existential issue abroad.
Hi, very quickly. So on the softliner, hardliner question, I think the only serious debate that I've seen internally just reading Chinese sources, is one of, so the entire elite agrees that China should one day replace the United States as the dominant power in the world. Either, as a sort of duopoly over the world, or, China just being completely dominant. So that's not the difference between the soft liner and hard liner. But there is a serious debate about when China should behave as if it is a dominant power. So some people, I think, generally believe that China should behave today as if it is a dominant power, and then others say, well, let's just wait another 5, 10, maybe even longer for the United States to shoot itself in the foot, and then if the technological progress continues in China, then we can assert our power, our dominant power. So I think that is a debate that is ongoing, especially given some of the recent development. On BRI, I think one thing, I think the internal desire to change how BRI is done is genuine. And the reason is because China no longer has as much money as it did, say, 5 years ago, with which to throw billions and billions of dollars around the world. When the foreign exchange reserve was $4 trillion, China would use money directly from the foreign exchange reserve to finance many of the BRI projects. But there were a couple of problems. One is that the foreign exchange reserve is now a lot smaller because of capital flight in 2015. And so a lot of the new BRI projects has to be financed by borrowing money from Western banks to finance BRI. And there, of course, you don't want to get trapped in a situation where you borrow money, but then to finance a complete dud that ends up, like Venezuela or Angola, where China lost tens of billions of dollars. These huge losses and the dwindling foreign exchange reserves have certainly really alarmed the technocrats, and I think the technocrats over time have been able to persuade Xi Jinping that continuing to throw billions and billions of dollars around the world is not really viable. So they've switched to only doing it when it's strategically absolutely necessary, and also have a set of procedures to do it a lot more carefully.
Commissioner Lee?
Thank you. Thanks to the panel for excellent presentations and testimony. So my question is following up on some of the conversation we've been having about, I think you all agree in different ways that the Chinese economy and leadership are coming under stress from various causes, from the trade war, from cyclical and domestic reasons. So what are the biggest dangers for the U.S. From China being under stress in terms of the economy? And are there steps that Congress in particular could take to inoculate or to prepare for some of the likely impacts? And I guess one thing I would mention in particular is the currency devaluation. Dr. Xi, I think you mentioned it in terms of the risk for the U.S. in terms of financial exposure of holdings of renminbi. But there's also another risk, of course, in terms of the trade impact on domestic business and workers. And so I guess I was just curious whether you think there are particular things we ought to be doing now in preparation for sort of predictable reaction.
I guess I'll, okay, yeah, since I opened that door. So I agree with you that it is a potential risk because certainly there are economists in China who have publicly, advocated for sort of a one-step devaluation, right? So just devalue the renminbi by 20-30% in one shot, as not only as a countermeasure against the U.S. tariffs, but also generally speaking, economists have believed the renminbi have been overvalued anyway for quite some time, and to really sort of fulfill the market's expectation that the renminbi should be lower and just do a one-shot devaluation of 20-30%. Whether that will, so of course this will have a huge impact on U.S. businesses that compete with Chinese exporters. But by and large, I think especially in the manufactured goods industry, the impact will be bigger for Japanese, Korean, and German firms. Because these are the firms, let's say in heavy machineries and autos, etc., that are now today directly competing with China. So they will be hit even more. For the US, I think the impact is one that we're seeing already, which is that Chinese consumers will not buy as much US farm goods as before, but because of Chinese import restrictions, we're seeing that already. So that I think the biggest kind of trade shock for that kind of stuff, for devaluation, is already evident because of some other reason, which is Chinese import restrictions. The bigger problem, I think, is the financial risks. So banks, especially European banks, especially United Kingdom-based banks, also Korean, Japanese banks, but also US banks, have lent trillions of dollars to China and to companies and banks in China whose cash flows are denominated in renminbi. So if the renminbi were to crash, these firms, these financial institutions will have a much, much harder time to come up with the cash flows to repay the US dollar denominated debt. And that will force a large proportion of them to declare bankruptcy, to default on their debt, causing stress on US financial institutions, including banks, but including even mutual funds. A lot of pension funds have invested in debt issued by Chinese companies and banks. So I really think there should be some auditing, could be voluntary, or not, of both direct and indirect exposure to renminbi denominated assets.
I wholeheartedly agree with Victor. I think from a real economic standpoint, a slowdown in the Chinese economy, even a disaster, obviously hurts global growth, but the U.S. is primarily a domestic-driven economy and is largely insulated from volatility out of China on a real economic growth standpoint. I generally take a pretty positive view on China's ability to manage its currency. And what I mean by that is they have learned a lot over these past 2.5 years because of currency volatility, and they're actually quite adept at managing it. So I don't worry too much about the currency channel, but a financial crisis in China that hobbles Chinese banks. I think China has, the 4 largest banks in the world. That's something that's going to be a problem for the global financial system, and we don't have much view into how interconnected that is, both through renminbi flows and US dollar flows. We know China's external debt picture, about 2 trillion USD, which is large but small, and obviously in comparison to our economy, their economy. But commissioning a study to figure that out is something that it would be hugely productive and of value to every financial system and economy in the world.
So I would just make 2 quick points. One, I think that many American companies, as was raised earlier, have already begun the sort of China plus one strategy of beginning to diversify their supply chains, right? Even before the trade frictions began, this was already underway, as was noted. I guess from my perspective, one of the things I'm interested in is that distinction between sort of a multinational and a Chinese company is becoming almost non-existent. And that I think American companies are going to have to make a decision each for itself about where to draw a line. So whether you're having a party committee in a multinational or adapting to the cybersecurity law where you have to basically give over information to the Chinese government, or you're going to be subjected to the social credit system, or you're going to be living in a situation where your employees can be detained without any rule of law at whim. I think what I've noticed over the past few years is just the eating away of private and public that's broadly happening in China is also now being applied to multinationals. And I think that is a big challenge that American companies are going to have to confront moving forward.
I think you both raise issues, or they've come up also earlier, about sort of the vulnerability of the U.S. or some of the judgment. The U.S. companies are now so deeply embedded in China that they don't really have any choices in terms of, having to deal with their employees being arrested and so on. And I think earlier, maybe Mr. Polk, you made the point about supply chains and the lack of diversification in supply chains. And so these are all sort of investment decisions that have been made in the past that we're now reckoning with. And I guess one question for us, for the Commission going forward, is just to think a little bit more about, should we have foreseen some of this? Are there, has there been a failure of policy in terms of allowing such concentration and a lack of foresight in terms of investment patterns? Thanks.
Thank you. I have three areas of question, and I wanted to follow up on Commissioner Lee's interest in debt. So I want to talk about debt, banking, and bonds. My understanding is that the debt-to-GDP ratio is precarious in China. It's at 245%, which is worrying given the fact that it's an emerging economy, not a developed economy. Dr. Shi, you noted that in your testimony that Chinese debtors have presented $3 trillion in exposure to U.S. pension funds, mutual funds, and banks. Can you speak more specifically as to what banks, what pension funds, what mutual funds you think are at risk, and what the nature of that debt is? Is it equity in Alibaba, or is it bonds issued by a local government? That's my first question. My second question has to do with banking and whether the market, well, let's do the first question, then we'll do banking second. We'll get lost otherwise. Thank you.
Oh, yeah, so very quickly. So the 3 trillion figure that I put in the testimony is China's total, my estimate of China's total external debt to the whole world, so not just to the U.S. To the U.S. is roughly $180 billion in direct exposure. So that means that U.S.-based banks and investors have lent approximately $180 billion to Chinese banks and Chinese companies. By the way, a large portion of that was through Hong Kong. So this is why, so of the 3 trillion that China has borrowed from the rest of the world, China has borrowed $1 trillion of that through Hong Kong. And you ask, well, why would China do that? Why doesn't China just borrow directly from Beijing or from Shanghai? And the reason is because if you ask people within financial institutions around the world, because the IMF and the US legally treats Hong Kong as a separate entity as China, then the banks can say, oh, well, if the whole world's going to treat Hong Kong as separate as China, then we're going to do that also. So when we lend money to Chinese companies, we're going to lend both to their Hong Kong-based subsidiaries and to the headquarters in Beijing. That way, we can lend them even more money than prudential internal rules would allow us to do so. And you ask, well, why would they want to do that? It's because Chinese companies will pay higher interest. Right, so this is why they want to do it. So this is why if Hong Kong were to be treated as the same as mainland China, actually the credit limit of all the Chinese debtors will automatically get compressed by 20 to 30%. Right, so it is a big deal for China. When you're in debt to the tunes of $3 trillion, you don't want your creditors to suddenly compress your credit limit by $1 trillion. That would be a big problem for China. And I think that may be one of the reasons why China thus far has chosen, I would call a very moderate and soft line approach in Hong Kong, even though, of course, most people would disagree with me. But, to me, the spectrum is, what's happening in Xinjiang, Xinjiang is the hard line approach, and Hong Kong is the moderate, soft line approach.
The chairman had
just a clarifying question, which is we keep referring to bankers here, and I want to understand. Are you talking about investment bankers, or are you talking about our FDIC insured bankers? What are you referring to with the bankers?
So the main data source for me, at least, is from the Bank for International Settlement, and they report 2 series of data. One is for bank lending, and then the other one is for bond issuance, right? So I think U.S. banks has exposure, it's like 80 to 90 billion. So U.S. banks commercial banks, right? Not investment bank. Commercial banks have lent $80 to $90 billion to Chinese entities. But then U.S. investors have purchased, again, both through Hong Kong and through mainland China, an additional $100 billion in bonds issued by Chinese entities. But the buyer of these bonds can be both commercial banks and also mutual funds, pension funds, etc.
Sure. I do want to turn to banking and bonds. I'm reading a Rhodium paper that talks about PBOC essentially trying to decide whether or not it's going to bring to bear stabilizing influences in the potential bank failures or allow the market to price risk. And they point out there's an inherent tension between reform and financial stability. Stability requires PBOC guarantees to increasingly risky and peripheral asset markets. Reform requires paring those back, as the default at Baoshang has done. But PBOC cannot distinguish between appropriate and inappropriate pricing of market risks as guarantees because there's no history of doing it. So I'm curious about your perspective on what will happen when it comes to each of you, what's likely to happen in terms of PBOC's intervention to manage counterparty solvency issues. And then the second part of my question is, it seems to me that we've seen, when we talk about this opening of the financial market, we have seen a shift in local governments from issuing financing vehicles, which were off books, to issuing bonds. And I am concerned about, as I know, I recently read a report that the World Bank has indicated, they are concerned about the fact that there is an increasing emphasis on the issue of sub-sovereign and local bonds to finance projects. So if you could speak to the bond market, how risky it is, and does it simply reflect a shift from LGFVs to a different way of raising money that is comparably risky?
Sure. So starting with the PBOC, this part of what's going on is kind of what I started out my testimony with, is there's been a very active program to de-risk the financial system, specifically the banking system. And the way the banking system works, most of the most speculative stuff happens in the interbank market, which is a little bit different than interbank markets in other countries. There's more than just banks in there, and it's not just about closing books in between banks. You can use vehicles in the interbank market to then lend onto trust companies and other parts of the real economy. Because of that insanity, frankly, the PBOC started with de-risking the interbank market. And from 2017 to 2018, because all of those financial structures weren't really financing real economic growth, unwinding them didn't really have an impact on real economic growth either. But that started to have an impact on growth starting in mid-2018. So now the financial regulators are in a situation where they're trying to deal with basically the effects of the de-risking campaign. They call it the risks of addressing risks. And so the de-risking campaign has slowed growth at a time when you're trying to slow growth of financial assets. And what that does is basically it's the tide going out. We're seeing who's swimming naked, right? So Baoshang Bank was definitely swimming naked, Bank of Jingzhou, Hung Feng Bank, those are the three that have really blown up. And there is an effort to try to push these banks to price risk more on a market-driven basis. This is, just in the past few weeks, PBOC has introduced a new monetary policy mechanism called the loan prime rate, so that they can build an interest rate corridor or an interest rate curve, so that banks kind of understand where risk lies, both in time and space. I view all of these as quite positively. You got to remember that the PBOC was created in the 90s, I believe, right? And so they're building all this from scratch. There then has been the moral hazard issue on top of it. So they're trying to slowly address moral hazard without blowing up the system. And it's a very difficult thing to do. So, in my view, that's the most positive thing that's happening in China, is financial reform in terms of trying to do this in a marketized basis. I'll just quickly touch on the two other things. your question about which pension funds getting exposure to China, the answer is every single one of them. And the reason is because of MSCI inclusion, bond inclusion, all of those things. The exposure is relatively small now, but it's only going to grow over time. You know, when we sign up to a new job and you pick a random pension fund from BlackRock or Fidelity, they all have an emerging market index. And those indices are increasingly including China. So our financial system has become, and the pensions of our teachers and other employees in our country are increasingly intertwined with China's financial system. So we should be aware of that at the very least. The final part on the LGFE bonds, I also view this as a positive development. I mean, for years, economists have said you need to harden local government budget constraints. That's effectively what they've done. They've said we want all this on book, rather than doing it in the shadows. They're leveraging up more slowly. They're still leveraging up more slowly. It's a little bit more transparent. So I think, again, this is an area that should be encouraged. It's okay for local government bonds to be used. It's actually better than using the LGFEs. In terms of the riskiness, we don't really know because we haven't had a LGFE bond, default. But in general, we should view it as high quality government paper because it's effectively going to be backed by the central government. So I think the developments in this space are actually, there's so many risks that they have to address that the problem is very big, but I'm quite sanguine in this area in terms of the proactiveness with which they've gone after the issues.
So I just want to really echo one of the points that Andrew brought up, which is the size of the domestic Chinese bond market. It is enormous. There's probably $6 trillion in bonds outstanding. And so that means that, a lot of the bonds mature every month, and then so you have to replace maturing bonds, and then also you have to issue new bonds to finance new debt. So that means every month there is 100 to 150 billion US dollars in new issuance. And, this is what keeps China going is it's like a big Ponzi scheme. And I'm not the first one to have said that. I mean, a lot of people say that. And actually, even the Chinese government say it is a Ponzi scheme. But guess what? We support it. But the Chinese government would like foreign investors to help them finance this. I mean, right now, foreign investors are buying anywhere from less than 1% to at most 3% of monthly issuance. They would like that ratio to increase to 10, 20, 30%. Because obviously, if the whole world is involved, let's say, with their debt issuance, then it's not in the world's interest to blow it up, and the whole world can help financing. And of course, the fact that interest rates are negative in Europe and in Japan is helping China's cause because, German and Japanese investors facing negative yields in their home country, they have an interest in increasing their yields. And besides the US, the only other major option that they have is China. So this is, just to give you guys a big picture view.
The bond terms are how long? The average?
They have everything. Well, I think on average, probably 5 to 10 years, because they have like 20-year and then they have short-term stuff.
At what percentage?
So sovereign bonds, so Chinese government bonds and all the local government bonds now is less than 3% yield because the Fed has cut rates, and that actually affects corporate bonds 4, 5%-ish, something like that.
Okay, thank you. Commissioner Lewis.
Thank you very much for your educating us today. I've been reading recently a lot about decoupling these two economies. Could you tell us, is that possible? How would it occur, and what would be the impact on the two countries?
I'll give you some numbers, I guess. I don't know. So to some extent, decoupling has happened already, especially, surprisingly, I think, on China's side. So China bought a lot of farm goods, bought a lot of energy products from the United States, hundreds of billions. That has gone down by a lot, 50+%. So interestingly, I mean, despite there's all this talk about, the U.S. is, guilty of imposing tariffs and all this kind of stuff, if you look at the dollar amount that's being traded between the two countries, China has shrunken that trade a lot more so than the U.S. I mean, U.S., despite the tariffs and everything, is still importing a lot of stuff from China because even with the tariffs, China is still better. So,
is that one of the reasons why our deficit with China is increasing?
Yeah, it's because the extent to which China has decreased imports from the U.S. is even more so than the impact of the tariffs on U.S. import from China. You're absolutely right. So if there's true decoupling, it will be because U.S. stopped buying goods and services from China. But I think costs for a lot of consumers will go up by a lot, actually.
What would be the impact on the two economies of the two countries if we decoupled more?
I think it's hard to say on an overall growth perspective. I mean, I think I think that each economy individually would not change that much, but the relationships with other countries' economies would change. What I mean by that is when I hear decoupling, I think generally the U.S. being concerned about selling core technology to China that's going to enable either military applications or their rise generally. The maybe ironic thing about that is China also wants to decouple. They don't want to be reliant on the U.S. for those core technologies. They would have preferred to decouple more slowly. But I think the natural outcome of that is that we're creating spheres of technological spheres, at least China and the U.S. Maybe Europe has its own sphere. And the long-term change is, what if an American company wants to do business in Argentina? Will it have to work on Huawei systems or other Chinese technological standards in order to do business there? So it's going to, I think, sort of fragment the global economy, raise transaction costs, and change sort of our interaction with other specifically developing economies.
So I'll just be brief. I think Made in China 2025 is in fact an effort to decouple, right? Because it's basically saying that it wants Chinese companies to control 80% of the, sort of market in 10 areas of critical cutting edge area technology, everything from medical devices to AI. So I think that process was already underway and it continues. And it's being played out. So I don't think we should be under any illusion that just because they're not talking about Made in China 2025, it's not happening. It is. And not only is it happening, but I think it's also being exported. So I think when we're talking about spheres of influence, it is in part, exactly as you say, things like a Huawei operating system, but it's also, for example, China now helping to build the health infrastructure in Africa. Right? So they're doing hospitals, doing good works ostensibly, but also then ensuring that Chinese factories that are making Chinese medical devices are the ones that are providing the sort of equipment for those hospitals. Right? So medical devices are one of the areas of Made in China 2025. And previously, China had passed a regulation in Fujian province, for example, that said if you don't use Chinese-made medical devices, then you can't be reimbursed through insurance, right? So I see this very much as, first step was made by China in terms of decoupling, and now we're going to be moving toward an effort at a broader sort of export of that decoupling effort.
Commissioner.
Thank you. Thanks for a terrific panel. In the interest of time, I'll dispense with my Wessel-like commentary and go to two questions. First, Mr. Polk, thanks for terrific written testimony. I have a question. I don't know if you have it in front of you, but on page 10, the paragraph under demographics, the last sentence reads, according to projections by the World Bank, China's working age population is likely to contract by over 193,000 people by 2050, a reduction of almost Mine says 193,000. Just a typo? Okay, that was easy. I appreciated the emphasis that all three of you have made on the notion that we can cooperate better with our allies. The narrative, I think, matters, and Dr. Economy, thank you for your thoughts on that. But I would submit it's not the case that our allies are just standing by, waiting to be called upon. Our staff, Dr. Economy, in preparation for the hearing, gave us a copy of the article you wrote in Democracy Journal in spring of this year. And the first paragraph of the conclusion, you say, the U.S.-China trade war has already produced a near set of winners and losers. The United States and China are both losers. Firms in some other countries are the winners, Malaysian and Japanese, Cambodian, Vietnam, Brazilian, soybean, and so on and so forth. I'd invite our panelists to comment on the degree to which this notion of our allies are just waiting for us to come back to them and then we'll proceed together perhaps overlooks the fact that they are in the near term benefiting to some extent, at least companies from those countries.
Well, I would say, so that's one way in which they're benefiting, but I would say all of our allies would still welcome the type of leadership by the United States that we've exerted in the past and have exemplified U.S. foreign policy in the past. But certainly I think Japan provides a great example, not just of a country that can benefit in some ways from the spoils of the trade war, but actively and proactively leading in the international space, right? So when we pulled out of the Trans-Pacific Partnership, Japan recreated it in a different form, the comprehensive, progressive, whatever, CPP, TPP, so that's moving forward, right? Japan is now the largest investor in Southeast Asia, doing more infrastructure development than China. It's becoming much more active, working in partnership with India and Africa and on high-end infrastructure. So I think they are moving forward without us in many respects, but that doesn't mean that we shouldn't get back in the game. And again, I think there are parts of our administration actually that are very much working with Japan and Australia and New Zealand to push back or to offer alternatives on Belt and Road projects. So a lot of things are happening that you don't necessarily know just from following what we hear out of the White House. So it's not quite as bleak, frankly, a picture as often is portrayed.
Yeah, I think, it's complicated. Most countries, most companies want some level of certainty, right? And so, yes, there may be short-term benefits in terms of capital flows, capital that would have been going to, Chinese capital that would have been investing in the U.S. is now investing more and broadly in Asia. German companies have been big beneficiaries of China's opening in terms of investing, BMW investing, BASF investing, Allianz, getting sort of China's wanting to show it's open to the global business community, and so it's making high-profile deals. German companies have been the big beneficiaries of that. But talking to these folks, representatives from those companies and those countries, they understand that it's short-term gains, and it may be not long-term gains, and so. They'd prefer a world where they like the U.S. putting pressure on China. They'd prefer to get to a place where China was following the rules and the U.S. and China were getting along, and they didn't feel like they had to choose between the two countries, because a lot of countries and companies feel like that. And so, it's short-term gain, but it from the people I talk to seems outweighed by the sort of feeling of long-term uncertainty at present.
Commissioner Talent. Yeah.
Well, I see we're out of time.
No.
We have time?
Yeah.
Okay. I'm going to follow up on some of Commissioner Cleveland's questions, and particularly with regard to the Chinese reserves that Beijing holds. How valuable, how big a role do they play in all of this? What are they being held in? And I say this because for years, when you talk about they're building up all this debt, it could create instability, there could be a run, this bubble. People will come back and say, yes, but they have $3 trillion in reserves. I guess it's less now. So what is that held in? Is that as big a backstop for them as people often portray it? Just give me your opinion on that.
Yeah, so I guess I'll respond since I've obsessed over this question for the past 8 years.
Like how much of it's held in their own debt? Do they invest this in their own debt?
Right. So, of course, the exact composition of China's roughly $3 trillion in foreign exchange reserve is one of the most closely held secret in the Chinese government. And you ask yourself, well, why is it such a big secret? You know, because you're supposed to reveal the exact composition to the IMF anyway. But I think even people in the IMF will tell you that they don't really know. As far as we can tell, you know, according to U.S. Treasury data, China holds roughly $1 trillion, maybe a little bit more than $1 trillion in U.S. dollar-denominated treasuries and also agency securities. So a third of it, we kind of know what it is, except we don't know if they have used part of their holding in treasury as collateral to get loans, in which case they don't really hold it. Some people suspect that they've done this in 2015 and 2016 when a huge amount of money was leaving China. Okay, so that's a big question. As for the other parts of the $3 trillion, I would say at least 300 billion of that has been lent to BRI projects, right? And so that's not very liquid. So it's not exactly what you would want in the foreign exchange reserve. It's not very liquid. And then from public records, you can see that 50 to 100 billion of that is actually holding Chinese stocks, right? So the foreign exchange reserve has several subsidiaries that most people know is part of this foreign exchange reserve. They've been buying stocks of Chinese companies and banks in the open market in an attempt to prevent these stock prices from cratering during financial difficulties in the past couple of years. It's not a huge amount, but if you add all of it together, it's 50 to 100 billion. Probably a little bit less than 100 billion. And then people believe generally that China holds a lot of euro-denominated securities that's pretty safe, but they don't think it's over $500 billion, right? So most people doesn't think. So the question is, that leaves a gap of another sort of 0.7 to 0.5 trillion that I think very few people know what's in it. Some people believe that it's actually not really there. So there's probably around $500 billion that's actually not there because China, the foreign exchange reserve, has entered into all these complex forward agreements with banks, whereby the banks really need the dollars, so the foreign exchange reserve will give them the dollars from the reserve today, but then take a promissory note, a forward from the banks, but then count that as cash in the foreign exchange reserve. They might have done that to the tune of several $100 billion in 2015 when they were in big trouble. So again, we just don't know.
Yeah, I really like you, Dr. Shi. I mean, I like the way, because, see, I'm not an economist. I'm a politician, and I know that they're under pressure. They're running out of money, and they got all these reserves there. And the temptation to borrow against that or to use that as a way to deal with the short-term pressure has to be immense. I mean, I just have to believe when you called it a Ponzi game. We're being a little discoursive because this is the last hearing, so it occurred to me a couple years ago, we're going through one of our drafting sessions, and they're doing this semiconductor fund and this with BRI and pledging $2 trillion to environmental remediation and everything. I looked up at everybody else and I said, where are they getting all this money? I mean, I've been in rooms, I was in the Congress and the Senate. I've been in rooms and people talk about, well, I want to do this new program. Okay, that's great, but it's going to cost $8 or $10 billion, and people here freak out. And they're just throwing all this money around. And I don't know where they're getting it. So I appreciate that. I also loved your comment. The difference between the moderates and the hardliners is the hardliners are open about the fact they want to be the global hegemon. The moderates want to keep kidding everybody for another 5 or 10 years. Thank you, Mr. Chairman.
I appreciate Senator Talent's comments, because this is something that I have been concerned about for some time, that if you have the kind of banking problems that we are seeing emerge with Baosheng and Jinzhou, and you are trying to prevent capital flight, and you are seeing a significant decline in foreign direct investment, which normally capitalizes your economy. I have argued that it is not yet a perfect storm, but I think that there is increasing pressure on the Chinese economy that we need to pay clear attention to the early warning indicators. The chairman had some wrap-up comments. Does anybody else have a? Go ahead. Go.
Yes, well, I'm going to have to defer my discussion and questions about the private sector and how it actually exists and is defined. But I wanted to associate myself with the comments of our vice chairman on Hong Kong when her opening comments. And Dr. Sher, I think it's a very important point that you mentioned that Hong Kong is an important source of capital for the mainland. And I think it's very important that people in the mainland understand that the reason that that's the case is because of Hong Kong's commitment to a rule of law and an independent judiciary, and hardline tactics and trying to manipulate those things is only going to work against the interests of the people of the mainland as well as the people of Hong Kong. Thanks.
Any other summary comments that you all would like to offer, since we've offered ours? No? Get out while you can.
Thank you very much.
Thank you very much.
We'll be back at 11:20. Is that all right? 11:25. How about 11:25? Skylar Mastro, who is an assistant professor of security studies at the Edmund A. Wilson School of Foreign Service at Georgetown University, and a resident scholar at the American Enterprise Institute. She's the author of The Costs of Conversation, Obstacles to Peace Talks in Wartime, and is currently working on a book about China's challenge to U.S. primacy. Next, we'll hear from Dr. Andrew Krepenovich, who is a senior fellow at the Hudson Institute and adjunct senior fellow at the Center for New American Security and president and CEO of Solarium LLC, a defense consulting firm. He's previously served as president of the Center for Strategic and Budgetary Assessments in the Department of Defense's Office of Net Assessment and on the personal staff of 3 secretaries of defense. He's the author of several books and monographs, most recently publishing The Decline of Deterrence earlier this year. Our third panelist is Dr. Michael Green, who is the Senior Vice President for Asia and Japan Chair at the Center for Strategic and International Studies, CSIS, as well as Director of Asian Studies at the Edmund A. School of Foreign Service at Georgetown University. We are overrepresented by Georgetown University today. Dr. Green has authored numerous books and articles on East Asia security, including most recently By More Than Providence, Grand Strategy and American Power in the Asia Pacific since 1783. I ask all of our witnesses to keep your remarks to 7 minutes. Dr. Mastro, we'll start with you. Thank you.
Thank you. Thank you, Chairman Bartholomew and Vice Chairman Cleveland and the rest of the commissioners for having me here today. I'm going to highlight a few aspects of my written testimony and the major developments in the last year in Chinese military modernization and focus specifically on the Sino-Russian relationship as well as the new defense white paper and what it means for competition moving forward. In terms of regional activities, two big things I want to highlight here. The first is that Taiwan is still the driving scenario for the PLA, and what this means is that training, procurement, reforms, and reorganization all have implications for Taiwan. So in the testimony, I list a number of platforms that are coming online in the next year. For example, China has begun 2 years ago the construction of a new nuclear attack submarine. They also have a new type of destroyer that are expected to come online soon. These platforms, along with the platforms they already have, such as aircraft carriers, cruisers, destroyers, frigates, corvettes, amphibious assault ships, all of these can be used in scenarios to coerce, blockade, invade Taiwan. The Chinese Air Force has also made significant developments that would have implications for Taiwan. They're currently developing a new strategic stealth bomber, and they have a whole series of bombers, fighters, airlift, and helicopters for the ground forces that are all scheduled to be online and ready to go by 2020. The Chinese military developments in this area are particularly concerning because of Xi Jinping's increasingly strident rhetoric on Taiwan. In his New Year's Day speech, he outlined that unification is the ultimate goal of any talks in the future. And in my analysis, based on this speech and subsequent speeches, it seems to me that Xi Jinping no longer just demands that Taiwan does not declare independence. He is now demanding that there are concrete steps towards reunification. Now, what specifically this means, I think there's great uncertainty, but at the very least, China probably wants to restart bilateral talks. And to do this, they hope that the political party that's most amenable to this, that being the Kuomintang, will win the presidency in 2020. And in the meantime, China is conducting very sophisticated exercises and in greater scope in order to intimidate Taiwan. The most recent happened in July after the United States announced an arms package. Now, while Taiwan has been the focus of the PLA, the South China Sea has been of significant concerns, largely because of the relative improvements in Chinese military posture there. In the past year, we haven't seen as much militarization happening, and that's only because a lot of that land reclamation militarization had occurred before. But we do consistently see the rotation of certain platforms on the islands, the J-10 fighters that are coming in and out of Woody Island, and they are extending radar capabilities. China is also increasing the operational tempo in these waters, which suggests that they are practicing to have a more persistent presence there. Of note, in July of 2019, China conducted a series of anti-ship ballistic missile tests in the South China Sea and Spratly Islands. This is the first time they conducted such a test over waterways versus over land. Beyond East Asia, China military activities have increased significantly during Xi's tenure. According to the Defense White Paper, the Chinese 2019 White Paper, China participated in 11 international humanitarian aid and disaster relief operations, 100 international joint exercises with 17 different countries and organizations, and has been active in 5 peacekeeping operations overseas. In 2019 alone, they've already conducted 13 of these joint exercises and humanitarian aid disaster relief operations, which suggests this pace is increasing. Of significant concern, I think, is China's increased military presence in Africa, which is primarily expanded through their first and only military base in Djibouti. They also sell a lot of military equipment, drones and other surveillance equipment to Africa. I think this is an area to be watched, Chinese military exports abroad. Also, future developments in China and the Pacific Islands and the Arctic deserve to be watched, but right now, especially in the Arctic, the focus seems to be mainly on energy, and China is increasing their cooperation, military cooperation with European nations. But again, most of this is more for the image of improved relationships. The area I think that is most concerning to people when you look at security developments is the China-Russia relationship. And there's been a number of notable trends in this space which have been greatly covered in my testimony and other venues. It is true that China has increased exercises, arms sales, and diplomatic platitudes when it comes to their relationship with Russia. I think this is not sufficient to suggest they're moving away from a relationship of convenience, and there are a number of obstacles to closer ties. Specifically, China sees Russia as a liability and is interested in being seen as more of a legitimate great power. Also, Russia still has relationships with some countries that China has poorer relationships with, such as India or Vietnam. But while I think that we're being too alarmist about the relationship becoming closer, I think we're not concerned enough about what even the smallest degree of improvement in this relationship would mean for the United States military. So I think the first thing is that it seems that Russia has accepted a junior partnership. And this will change, I think, how we think about the cooperation moving forward. I had always assumed that it would have to be symmetric. So because China is not really willing to put its neck out for Russia, for Russian goals in Europe, I assumed Russia wouldn't be willing to help China achieve its goals in Asia. But it seems, especially with the joint patrol that the two did over the Takashima, Tokto Islands, that maybe Russia is willing to help China even if China is not willing to reciprocate. This, to me, sparks a new trend in the relationship that might mean greater Russian military involvement in Asia, which will complicate U.S. military operations there. For China, they like to posit themselves as being a force of peace in the world. The Chinese Defense White Paper is not a national security strategy in the way that the United States has a national security strategy. It is written by foreign audiences, and it had a few main themes that they wanted foreigners to know. The first is that the Chinese military is becoming much more comfortable with a global role, and China and the parties becoming more comfortable with the PLA becoming more involved in promoting and implementing this role. China also promotes itself as a force for peace, while the United States is an instigator of strategic competition and regional conflicts, arms racing, power politics, etc. And also, the white paper is interesting because while it tries to assuage concerns about its military modernization, it had very harsh rhetoric for the first time about Taiwan and the maritime disputes. The last point I'll make is about the near-peer competitor. I was asked whether China has reached the level of the United States, and I will just say that China does not need to be as sophisticated or as big as the United States to prevail in a conflict against the United States. We're fighting different wars, even if it's the same war, we have different challenges, and I'm happy to go into that in the question and answers. Also, because deterrence requires both capabilities and resolve, if we have a balance of capabilities, that means we don't have a deterrent. Because China is much more resolved. They're willing to accept higher costs than the United States is in most contingencies. And therefore, to maintain deterrence, the United States actually has to have better capabilities so we would suffer less than China would. Also, there's a difference in how to assess trends of today and the future. The issue isn't that China has overcome or surpassed the United States. The issue is that given certain trends in the region, China will soon be able to outmatch the United States. And as we know, on the global stage, China is nowhere near being a peer competitor to the United States. So I have a number of recommendations in my testimony. Most of them focus on the South China Sea issue, which is, I think, the key area of strategic competition on the military side between the two sides. I think the United States needs to prioritize a diplomatic solution with or without China, get all the claimants to agree on the sovereignty of the islands and what rights those islands give them, and then have international enforcement of them. I think the United States should consider protecting exclusive economic zone rights in their alliance commitments more clearly, and improve our force posture in Southeast Asia. Right now, we're optimized for conflicts in Northeast Asia, not Southeast Asia, and it will take a great deal of political will to be able to have access in Southeast Asia. And I think that is what's really needed at this time. Understandably, states don't really, leaders are worried about doing this because they want to avoid a war with a near-peer competitor. But in my view, the only way to prevent a war is to deter Chinese aggression. If China doubts the United States' will to fight, or our ability to prevail if we did, then they're more likely to rely on coercion and aggression. And this is what will drag our two countries into a war. So because of this, I think the United States needs to put all of its military resources behind maintaining a regional order, even if this means taking a few risks to ensure its success. Thank you.
Thank you. Dr. Kripanovich.
Thank you, Chairwoman Bartholomew, Vice Chairwoman Cleveland, members of the Commission, for the opportunity to present my views on U.S.-China relations. Given my background and expertise, I'll focus my remarks on the military aspects of the relationship, and in particular,